Good day, active trend traders. Welcome to this week's edition of Weekly Triggers for Active Trend Trading, the Active Trend Trading System. This is Dennis Wilborn with the Active Trend Traders. We like to refer to this video as On the Radar. These are stocks and or ETFs and or events that are taking place during the week. The current week that's going on. Today is Sunday, November 12th, and so we're taking a look forward into the next 7 days or more. I want to remind everybody that all the materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. As I'm sitting here today, we are on the Big Island of Hawaii. As we bring today's session to you, I'm sitting here looking up over out my window at Mauna Kea, one of the volcanoes here on the Big Island, just getting ready to go to church in a few minutes. So I want to remember that seasonality. We've been really hitting on seasonality this year, and we'll continue to hit on seasonality. Been working totally on continuing to refine our processes, simplify our processes so that we can clarify, simplify, so that we can all multiply going into the, throughout the year and into the new year. 2018 is right around the corner. The video is intended to highlight potential trigger setups for active trend trading strategies 1, 2, and 3, based on the 5 pillars of active trend trading, which are, of course, what to trade, when to enter, when to exit, what strategy we will use, and what we expect to happen. We answer the following questions as we try to, with our weekly review of the stocks and ETFs. 1, are the stocks and ETFs we're looking at great high quality stocks and ETFs? If you've been following us for any time whatsoever, you know that we have a very, basically high level stable of both stocks and ETFs that provide multiple moves throughout the year for our gains. And the other question we ask, do the entities we're tracking, do they trend and show patterns that we can then, look to the future of, stocks, if they show patterns, tend to repeat themselves, throughout the year. It won't be the exact same, but there is a psychology below, in the people who trade the entity that drive it into certain patterns, and that's what we look for. Is the stock ready to buy, or is it extended? Oscillators. Are the oscillators in sync? When the oscillators are in sync, there is basically a higher probability of success. So let's see what we have going on today. Now, here's the 3 strategies we do follow. Here's strategy 1, portfolio building. 63% of our capital is tied up in 4 to 5 positions of either ETFs and or IBD growth stocks and or other stocks that come from the IBD watch list. I really like the way IBD does its fundamentals, and so that's why we hang there. Options. We do a couple of simple options. Option strategy 2 is either buying calls, puts, and or selling premium via spreads and all that kind of stuff. 10% of our capital is wound up with that. And then strategy number 3, which is one that we really has done very well over the past couple of years. And income wealth building, we basically build a leaps position in the Spiders, Tesla, NVDA, and then we sell weekly premium against it. We get both a benefit from any movement of the underlying stock and get a little bit of extra cash flow in over the weeks that we're holding the position. Our target for each year is somewhere between 50 to 100% return. That's after paying for our initial investment. Then an early warning alert service. The early warning alert service is going to be changing slightly for 2018. If you are a early warning alerts person, and our rates are going to be reduced in this area. So if you do have a higher above, let's say $249 or $250, and it's due to renew, you may want to cancel that renewal, and a new price level will be going out with some new objectives for the early warning alerts. But still, this is done phenomenal. It has hit every one of the market lows going back multiple years, but since we've been utilizing this service, has done it for the last 3 years. Every one of the market lows it has hit and predicted. Here's our performance year to date. Since this is normally we'd be sharing this on our other webinars, but we didn't do any other webinars this weekend because I was traveling. So we're up over our 40% for the year. This is total. And then this divides it into the different strategies that we're using. As you see, strategy 3 really has done a bang-up job. We have closed 2 positions in NVDA on that, and then we are holding right now Tesla and the spiders, and we'll look to reload those strategies going into the December-January timeframe. So I want to remind everybody that we are continuing to look for seasonality. We are in this part of the chart right here. So if, in fact, this weakness we're seeing currently in the current market is pulling us back down to support level, we want to participate in this piece of the rest of the year. So over the next 6 weeks, that's what we want to be participating. We're seeing a similar thing going on in the Russell teams to flail around in the first part of November and then take off, and typically run somewhere between up to 4 to 5%. So that's somewhere between 10 to 15% on a no, I'm sorry, that's 12 to 15% with a leverage ETF, and that's what we'll be looking at doing with the Russell. So here is our strategy 1, strategy 2. This is our go, no-go table for the week. The only real go entity that we have on here is IBB. We'll take a look at that chart briefly. And then currently we're holding Play, we're holding Kiwi, and we're holding YY. Play was one of our catfish trades that is continuing just to hang in there, and we'll see if it gets a spurge going into we actually took out T1 for profits, which is about a 5% gain. And so we got some profits off the table on that. Both Kiwi and YY will be closed this week because of earnings. So these were pre-earning runs. And then, of course, some of our stables that stable stocks that we want to keep a look at continuously: Tesla, NVDA, Netflix. Great patterns on those. No setup right now, but great patterns on those, and they move one heck of a lot during the weekend, and so it makes them very good for doing swing trades. I currently also like IBB. I like GDX. And of course, that translates to GDX. These are the non-leverage ETFs. GDX, of course, translates into Nugget, NUGT. And we'll take a look at those charts here briefly. Let's see what we have going on here. Okay, here is the bonus strategy. For those who are not, for both premium members of the Active Trend Trading System and non-members or people who just join us for the free webinars on Monday and Friday, I am putting out between 10 and 12 bonus trades per year. So you can see how the Active Trend Trading System works, and see how what kind of performance it does, and also and then of course for the premium members you get all the rest of the stuff, all the rest of the triggers. And so we've had 2 of these so far this year. We've got Play. We took out half the, part of the position. It triggered out at 5%. Actually wound up selling at 4.73. We're still in a half of that position. May increase that back up to a full position as it goes into earnings run. And YY, again, we're anticipating that to go into the earnings run over the next couple of days. On the 14th is when earnings are. So this is a nice feature. If you want to tune in and just become a follower of Active Trend Trading, this will definitely make it worth your while. Of course, we encourage you to become a full-fledged premium member because you get so much more stuff as a premium member. So there's a little bit of what we do. This is our model for active trend trading: clarify, simplify, and multiply. We're on a constant search to be able to clarify the system, simplify the system, to make it where we can all be multiplying our capital and our knowledge. So let's take a look at some charts, and we'll get on over to taskbar. There we go. Let's take a look at some charts here real quick. And I'm going to be looking at the daily, weekly, monthly charts. We'll blow this up a little bit. Hopefully I can blow it back down. There we go. Yep, I do have my drawing tools. Excellent. Okay, here's SPY. As you can see, spiders, purely from a oscillator standpoint, of course, this is a negative divergence, guys. Okay, on a daily chart. The longer term weekly chart looks like it's ready to roll over, but prices are continuing to push up. Prices can continue to push up even after this gets up into the oversold condition for quite some time. If we use the plus 50 on a daily chart, daily and our weekly chart as your overbought condition, and a minus 50 is your way oversold condition. As you can see, when it gets up into the plus 50, it can, in fact, even though that is overbought, it can continue to surge higher, which is exactly what it does. What's the S&P doing to us here, doing for us or doing to us here lately? They've been doing these really shallow little pullbacks. What? To the, this is the 8 and 20 weekly moving averages, which equates to approximately the 50 and the 100. So in other words, that was down in this area where we got a pull back into here and then a pop up. Let me get we'll draw a circle around this down here so you give it a flavor for where it's at with the, see, that's right here in this area where you get this short 3-4 week pullback and then a pop higher. And the pullbacks have just not been lasting long. So short, shallow pullbacks and then a pop higher. If each one is going to be showing, and let's go on over to the NASDAQ, QQQ. Again, QQQ's, the daily TSI has in fact already turned over. May take several days for it to pull back. It's got strong support just around the 150 to the 149 level on the Qs. And then if we pull back into that level, we can anticipate, a rebound going into the end of the year. That's seasonally what tends to take place. Again, we do not have negative divergence here. We do have some negative divergence over here on a weekly chart. So the Q's still looking pretty good. IWM, of course, this is one that I'm really keeping my eye on. Weekly chart, significant crossover. How far is it going to go down? It could come down to the way these TSI, and that's one of the reasons why I really like TSI, is you can draw in a support line there, because they basically show such wonderful patterns, and so oftentimes TSI will get down to this level and then rebound. Well, that could be down here about the 144.25 level, or we're really close to it right now at the 145 level, which it reached on Friday. Or I could dig down a little bit deeper into that before it does its rebound. What is hanging up the big issue on what is hanging up the Russell, of course, is just very simple. The tax program. So the 50% retracement would be down here about the 142, and that makes total sense, as you can see there. And the 638 is down here about the 140, this is on the fib retracement. Very logical and very places where it has retraced several times. So if they dilly-dally around with taxes and do not do anything substantial, where and they continue to increase the interest rates, the Russell as a small cap index, since the small caps are hit so hard by interest rates, this could basically go into a swoon before the other two indexes. And so we'll continue to watch this. I would consider right now it is a toss-up type of play on IWM. Now let's take a real quick look at a couple of the other ones we're looking at this week. One of them being IBB. It is down into a level of support. We are getting some positive divergence on the TSI on a daily chart. What does that translate over to? Well, that translates over to, of course, LABU, which is the 3 times or even maybe more times leveraged ETF for the IBB. I've got to do some additional research on this. One of our premium members, Eric, was saying that it looks like it's actually has a greater level of being leveraged than we thought before. But if we are getting a bounce right here, this is a very, this can be wet and wild, but we are at a point where, somewhere around the 72.40 level or even down here about the 73 level, we may want to be looking at the possibility of getting into a position. We've got support right here at, the 72 to 71 level or 70 level. So somewhere in there. Watch your TSI on a weekly basis. It's come down here to the 0 line several times. 1, 2, 3, 4. And that's a place where it has bounced before. So we've got a couple of things. We've got the trend line and we've got the support. So the aggressive traders can trade down here towards support, and the rebound traders can trade when it breaks back up through that trend line, or when we have clear TSI tick up. That's a place to go. GDX. Again, GDX looks like it's kind of selling off. I like GDX, but I like it down here at the 21, or actually 22 full number and 21. It could run all the way back down to this level here, which is just about, about 1850. But gold tends to go into a bit of a rally towards the end of the year for whatever reason. And so Nugget, as you can see, take a look at Nugget. It too is basically, get rid of that, remove that. It is pulling down into that level, 25.75 to the 22.30 level. And if it gets a rebound here, that could really, it could spurt up very, very nicely. Because even if it runs from where it's at, there we go. Even runs from approximately where it's at back up to its past high. It's about a 50% gain. So that's one of the reasons I like Nugget. Trading it, in both directions. And since it runs so much, it's well worth waiting for the trade. Then finally, Tesla. Just real quick on Tesla. Tesla not really giving us a really great setup right now. I like Tesla basically bouncing its head up here against the moving average. Take a look. Daily basis, Tesla is now below the 200. That level can, line up for a pretty strong level of support. We can also draw in another trend line here, which we need to be aware of. Is there's this trend line here. This is the one up here is a stronger level of resistance. But as long as, it's really close to hitting this level and rolling over. So how do we want to trade that? Well, Tesla back up into the 8. We could trade that to the downside. Its range here is from 308 to, about 192. And so that equates to approximately $14, $15, and so Tesla's continuing to do that. Its downside target per one of the institutions is about 260, they say, and so it is looking very nice for a downside continuation. But it may get a rebound. It would be, it may get a rebound, and so we'll have to ask ourselves the question: do we want to trade the rebound? But you can put yourself an alert in here about the 320 or just say 317 level. And if it gets close to that level, at or above, there we go. And if it gets close to that level, yeah, we'll put on here just a stars and stripes. If it gets close to that level, towards the bottom, then it alerts out that may be a precursor for hits, resistance, rolls over, falls. NVDA, different story. Pushing on to new highs, clearly a negative divergence on a weekly basis on TSI. The longer term TSI on a weekly chart is getting up to where it typically turns around. So we've got a double top going with the TSI on a weekly chart, and so which would potentially be negative. And then on monthly chart, of course, we got the whole month of November, rest of November to go. But right now, it's shaping up as a negative divergence, longer term on NVDA. No trade right this moment. NVDA is one of those traded off the 8 or the 20 to the upside. Netflix is kind of fun. Netflix, I like Netflix better than any of the other FANG stocks. We're bouncing off the 50, guys. And so bouncing off the 50, if it stabilizes right there, and look how well this lines up with our support over here at the 190 level, this past high. Okay, that's an important trigger. I mean, that's an important aspect. TSI has not ticked up yet, but we do have a reversal candle. In fact, we had two of them. One hammer here, that was voided. This hammer here. So by the long tails that you see here, it is looking for a place to reverse. So I like Netflix going into next week. I would roll over to the daily charts because, okay, the intraday, daily, weekly chart. So we're getting a range of about $3 on a weekly, about $12. And then, of course, we have earnings coming up where first part of the year. But if you get a pullback down here to approximately this level where it does in fact fail all the way back down to the 20 period weekly hour trade, that could be a trigger in. Or if it just if it drops the 50 and then bounces back up through it, that would be a potential entry. But it's looking really interesting. Netflix is one of those where you could trade from right here. You could trade the like 192.50 put credit spread and take in a little bit. It is slightly in the money, but it would still probably draw you in a buck or so, or maybe even more than that if you sold it on Monday. Let's take a real quick look. Matter of fact, as long as we're here, let's take a real quick look at that to see what it would provide you. And then, well, I'll take a look in just a second. We're running real quick over here to play. Play continues to shape up very nicely. It appears, and this is one of the reasons why daily chart play looks like junk. Weekly chart, yeah, it looks a little bit better, but the monthly chart, what does that show us? We're still in a nice uptrend with play, and it's doing a nice pullback into a strong level of support right there at the 47 level, 47, somewhere between 47 and 46. And we're getting a nice little rebound. If we can take it back above the 50, then play, Dave & Buster's, could be in a move back up to the upside very nicely. What would be the move if it in fact went that? It just back to its past highs approximately. That's about a 40% move. One of the things I've been working with Lee Tanner, guy's a wealth of information. We've been talking about a little bit about staying in trades a little bit longer and that kind of stuff. And he said that basically in his process, only 2 out of 5 of his trades actually reach his profit objective of somewhere between 20 and 25%. The other 3 of 5 typically have a 1 to about a 2% gain, he said, on average, because he gives them room to breathe. What's the time frame to reach his 20-25% gain? From breakout or from when he enters his trade, alternative entry, somewhere between 12 and 16 weeks. So what does that tell us also? We got to be patient and watch these things. But anyway, I'm liking to play. I'm liking Kiwi. We've got earnings coming up on Kiwi. Don't want to be in a. It's just kind of like it's stabilizing, but it looks like it may or may not. If I get back up to 1750 or close to it prior to earnings, which the earnings are coming up on the 16th before market, which means I have to close it on before market closes on the 15th. I've got a small call position on this, and we'll just shut that down. Had a very, very small exposure, risk exposure, like $250 on this one. That's all. YY, a little bit more exposure. Actually, we triggered into YY when it pulled down below the 8 here, so we're in it for a few shares. We've got positive divergence. No, it's not positive divergence, but it pulled down here. We are getting, we've got a strong level of support in here between the 87 and 88 level. We'll see prior to earnings Monday, Tuesday, because on 14th, which is, I want to say Tuesday, after market, it repeats. So I will be closing the position out. But if it bounces back up here to the 92.50 level or up to the 93 level, I'll shut that, and we'll shut this down for a small profit, and that'll be fine. So one last thing, and I want to show you on Netflix. Screen, taskbar, paper. There we go. Let's take a real quick look at Netflix. And Netflix, listen, we were talking about, if it gets a rebound here, just doing the, okay, it was sitting at 192. The 192.50, sell that put and sell it maybe too wide, or so if we sold this one, sell. This is for a credit. Okay, so $2.50 as it sits right now, and that would be buying the 190 put, selling this one, and I don't know and so what's our risk on this? Our risk would be about $745 to gain 500. And you can modify that and say, okay, well, I want to make, let's say it's a $2.50 wide spread. I want to make $2.25. That'll make me a 1-to-1 ratio. So then my max loss would be 625. My max gain would be 625. And I could launch that out. And if it gets filled on Monday, fine. If not, that's fine too. If I want to reduce my risk, I just simply reduce my position size. Say I want 375. And if I'm taking 70% of 375, or even 60% of that, I'd be pulling out about $250. And that would be cash flow positive for the week. Matter of fact, that's how I would try to trade that. So at this point, I'm not going to enter that. I'll be taking a look at it first thing tomorrow morning. I am on the Big Island until Wednesday, and so everything goes back to normal starting on Friday of next week. We'll have both our final hour and our regular 11 o'clock video, our webinar. So save that. And away we go. So, okay, that concludes the update for today. I hope you have a wonderful, great day, and just be standing by. Premium members, my alerts will still be going out. So I'll be looking for some conditional alerts on the SPY Strategy 3, and we'll see, and we'll be also placing our exit orders for YY and Kiwi going into the week. So with that, aloha and God bless everybody.